that you're learning the building blocks to formulate a trading model for yourself. In the beginning, it's normal for you to not know the direction of where you're going. It's normal for you to not know what PD array to focus on. And I was promoting the idea that you could organically arrive at which PD array that you're going to focus on as your multiplier, the thing that gets you into a trade, whether it be an order block, a fair value gap, a breaker, it's something to that effect. But you don't need every single one of my PD arrays to be profitable. And I'm going to teach in January in those 20 contracts, in those 20 individual lectures that will be pre-recorded, so they're not live streamed. That way it'll allow me to make these videos real short and concise. I know that sounds impossible, but I purposely make these things sometimes long, not because I love the way I sound or my own voice, but because I want people to physically put the effort into listening to good sound logic, in addition to me tucking in the little nuggets and the gems inside those lectures. So it's all premeditated, okay? And kind of like when I tell you it's going to be a long one or a short one, it's a long one. Or if I say, all right, I'm done for the day, you say, it's a running gag I do on Twitter. It's something I intend to do because I know people are going to laugh about it. And the new people are going to be like, what is up with this guy? He just said he was done. He keeps coming back. I love that. It makes me laugh. It makes me smile. And I know if I'm smiling about it, I know there's a lot of you that get the joke. You've been around me long enough. And it's funny to see people literally lose their minds over, like, this guy's out of his mind. Like, he's impulsive. I'm not impulsive. But I play a character online that makes you think that I am. It's just that entertainer aspect of me. I love doing that. It gives me a great deal of pleasure and joy. It makes me literally laugh out loud. And my wife looks at me, what are you doing now? What do you do, Michael? What did you do? What did you just do? It's funny. And sometimes she doesn't get the joke, but it's okay. She doesn't need to get the joke. She just likes that it's not drama where it's hurting anybody's feelings. And it's something that just makes me happy. It makes me smile, and it makes other people that are part of our community smile. And it's hurting no one's feelings. And to me, it's fun. So the point is, you're going to see how you can pick certain aspects of what I taught. Instead of trying to have a kitchen sink approach, meaning everything that you have to make or prepare food is in the sink dirty. Okay? When you're trading and you're building a model, you only need a couple components. But you have to have a basic understanding. When should you? When shouldn't you? Those are very generic things. Knowing when the market's likely to be conducive for a easy trade, which I define as a high resistance liquidity run condition, that's a more difficult trading environment. Not impossible to trade, but a new trader is going to be very hard pressed to find the very first entry being met with no drawdown. In fact, they're probably going to get stopped out a lot if they keep trying, and if they don't know how to control themselves, they'll go on tilt and blow their account. Or if they use these funded account companies, they'll go into maximum drawdown, and then they'll be forced to stop trading for that day. If I understand it correctly, I think that's how it works. I don't know if it means that you stop trading for that day still, or if it ends you. I don't know. I don't know the full dynamics, but the folks that are listening that do trade that kind of stuff, you understand what I mean. The point is, in high resistance liquidity run conditions, I'm not trying to trade those environments next year in front of you. I'm not trying to do that. I'm focusing on times where the market's more liquid and it's loose. That means it's going to be low resistance liquidity run conditions. That means when I'm putting money in these moves, I anticipate them to be free, fast, and loose, running right to where I want it to go. Quickly overcoming the spread and allowing me to reduce the risk. That's what I'm looking for. My mentorship has always been predicated on that being the final conclusion to you as a defining process, condition to trade in, what environment, because not every single day is a trading environment for a new trader. It's not. And these campus crusaders that want to parrot me in their mentorships and say they don't, they're out there trying to fill your head up with nonsense. They are not properly educated. They have no idea what they're talking about, and they're not equipped, and they are not even in a position of authority to be talking like an educator. And they're filling your head up with nonsense. Not every single day is a low-risk trade for a new trader. And as an educator, I'm always going to start with that as my audience. And I am aware that most of you that have been with me for a long period of time, you have heard these before. You've heard these talking points before. It sounds redundant, but you're not the only person that's listening to me. And it takes a great deal of filtering on your part. And I understand it's not fun to do that because you want me to talk about something new all the time, some kind of new magic trick, some kind of new twist on something that will give you precision that this transcends all the other models that I've ever taught before. When you don't need all that stuff, all you need is a simple know when to trade, when not to, and that's derived by experience and understanding what price action looks like between the relationships between high resistance liquidity run, where the market overlaps the previous candles a lot of retracements back and forth. It still might go to where you think it's going to go, but it's not going to be a straight shot. That's not the conditions that I'm teaching students to trade in. But I have to teach them reading price action in those environments because just like following the tracks in the snow when you're going hunting, you will recognize because you've seen it before. You've walked that path before. You know that there's deer walking in this pathway. So if you put up a hide and you wait, give it enough time, when? Always in the morning and late in the evening. That's if you were here with me at my home, it's amazing how like they're cyclical. All these deer show up in the span of 3 hours. There's a 3 hour window where we can set a clock to. This is like a kill zone in time. Right before dawn and 2 hours after dawn, I know I got 15 to 30 deer in my backyard at the edge of the forest. In the evening time, the same thing. I watch them come down the hill. It's always the same thing. Always the same thing. 1 hour before sunset and 2 hours after sunset. They're just there every single day. In fact, I had to tell people to get off my property about 4 days ago. They're out there stomping around in the forest. I was like, had to walk out. I said, what are you doing? Like, what are you doing on my property? Oh, we shot a deer and we asked your neighbor if we can come. I said, my neighbor doesn't own this property. I own this property. Get off of it now. But I'm trying. You're trying to find your way off my property, Jack. Okay, get off my property and don't let me see you come back here again. I don't care if you shot a deer. You're on my property. Don't come back here. I had to put that in there because it's live, and I would edit that part out if it would have been a recorded session. But the point is, there's times where you know that these things are going to repeat, just like the markets. There's kill zones. There are certain times where you're going to operate as a trader and say, okay, these are my working operating hours. And you're going to stick to that. You don't care what happens outside of that. Hunters don't care what the deer are doing when they're not expected to be walking around in these periods of time, early morning or in the evening. They just know that they're setting up shop right there. It's called a blind. Okay, it may be a tree stand or on the ground or a little bit above the ground, but they're simply just sitting in one position. They're not trouncing around in the forest. They're sitting still. That's what you as a trader are doing. You're sitting there waiting for your opportunity to shoot. Now, I personally, I guess I would if I had to eat that way, but as long as I have grocery stores, I'm not going to go out and kill an animal. I'm not going to do it. Okay, I understand why people do it, but if you don't eat it, you're just cruel. If you're just shooting it to take its head off and put it on the mount of a wall, you're a jerk, in my opinion. But if you're consuming that animal respectively and taking it out quickly, I guess I have no problem with that. But I personally have never killed an animal like that. But in trading, you would think I'm like Elmer Fudd out there trying to shoot everything, or Yosemite Sam, right? That's kind of like what I was when I first started as a trader at 20 years old. I was like Yosemite Sam. Anything you said would cause me to get into a trade going long. I'm out there shooting, and I'm carrying on like a crazy guy because I wanted to be in everything because I thought I was going to miss every possible trade. And that's not realistic, but it feels realistic and feels like it's a proper mindset as a new trader because you feel like the next trade's the only trade. The next trade's the last trade you're ever going to have that could make money. It's a weird paradigm shift that needs to be taken where you first start thinking about trading and then gravitating away from, I need to be doing something every day. The first permission you should give yourself as a trader in development is, I don't need to trade today. Now contrast that with every other influencer out there. They're going to tell you that you have to, or you're not a trader. A real trader can, no. A real trader knows when to sit still. A real trader is going to have a higher strike rate and a lower frequency of trade. And that's just the truth. But you're never going to hear these people say that because they're incentivized. Why? They got to get you trading. They got to get you trading in these ridiculous thresholds of skill set that you don't have, where the money that you make in demo account has a trailing stop loss on your P&L. You ever stop and think about it? Because that's exactly what they're doing to you. And eventually it's going to come down and stop you out. You're going to hit maximum loss or maximum whatever it is, and then you have to reset the account. And they make money that way. And you are pushing your progress profitably further down the road. But the influencer that you're worshiping, they're making money off of that. So they're incentivized by you trading more than you should, taking unheard of risks, trading with leverage, hoping you'll emulate them. So you blow your account and they can go out and do the things that they're doing that they would never be able to do because they can't make money trading. But they look like they are as an influencer. They look great, but they're really not as good as they're pretending to be. And you're feeding these people. You're physically giving them their lifestyle and they're rubbing it in your face the whole time. You're in an abusive relationship and you don't even realize it. So what I try to do is I strip away all that stuff. Okay, I got more money than all of them. And I could literally put them on welfare any given day of the week. I can go out there and show them they have nothing, they can't do anything. But that's not my motivation. My motivation is take the average Joe, the person off the street that says, hey, I just wish somebody would just simply talk to me plainly and not try to get up in my pockets about anything and show me what works and help me, put me in the right direction and give me the skills that I have to practice, and I will do it on my own steam. That's who I want to teach. And my millionaire students are the ones that have done that very thing. And a lot of them simply have nothing to do with social media. But they understand the components of making a model is not complicated. When they took notes from me teaching in the private mentorship, when I would say, you're going to learn a lot of things. I'm going to teach a lot of concepts. But the worst thing you can do is try to apply all of them. But every mentor out there that has my name, my logo, me as their mentor, trained and charter member by ICT, let me explain something to you, okay? And I mean this entirely. If somebody came forward and they're out there marketing themselves as an educator and they're claiming that they're a charter member of me, that's the worst person to learn from because they have no class. When they signed on to be a student of mine, they signed on understanding that they were not going to teach my concepts. But they're no different than a panhandler out there on the road that lives in a nice home, that drives a nice car, but they're wearing rags asking you to give them money, and they're making $1,500 to $2,500 a day tax-free. They didn't earn that money. They didn't do anything. They're just doing something to pull on your heartstrings. They're defrauding you. And by having my name saying I'm a ICT charter member, I'm a this and I'm a that, I personally trained by ICT, like I'm Bruce Lee or something. Stop that. Stop paying these people. Stop. And I know I'm making you angry if you're the persons that are doing it. I don't care. You weren't supposed to be doing this anyway. And anybody that pays you is an idiot because it's for free on my own YouTube channel. And I'm continuously introducing further education. And I'm not asking for anything. I don't care if you use it. I don't care if you love me. I don't care if you hate me. I don't care. None of that stuff has ever stopped me. But the ones that have done very, very well, when I told them not to apply everything, they took the notes and they took it to heart and they applied it. Well, how do you do that? What am I supposed to do with all the content on ICT? Like, I would eventually, given enough time, I'll watch everything you got out there, ICT. If it's something that you said I should do, I will spend time. If it takes me one video a week, I'll eventually get through it. Maybe, maybe not. But I don't feel like I have to do it if you point me in the right direction. So what direction would that be? Understanding there's conditions in the marketplace that are conducive for very easy trading, and there's other conditions that are not favorable for that. And most of my teachings are helping you determine what that is. Because no other book, educator, or course, or anything ever taught me that. I lost lots of money not knowing that. And because nobody else has a way of determining how to do that, I had to be the spokesperson for it. So I filled in all of the gaps that anybody that I looked at as a mentor when I was coming up, all their frailties, all their admitted weaknesses are all my superpowers. I took those opportunities and said, you know what? I'm going to be the mortar in between the tiles of this fortress of solitude. I'm going to fill those gaps in. I'm going to be the one. I'm going to use the experience that I took, and I paid for that experience with losing trades and blown accounts. I paid for that. So whatever I did at those instances, if I just simply reverse that logic, then there should be something that repeats, and there was. I was always buying when the market started going up instead of buying when it dropped down. I was always trading in a market that was high resistance, expecting it to finally break out. That's why I'm not a breakout trader. So I'm looking for conditions that markets leave open fair value gaps. I want to see imbalances stay imbalanced. That is a low resistance liquidity run condition market. That's exactly what every other educator out there does not know. And if they knew it, they probably wouldn't even tell you because it's an advantage. It's a superpower. It's an absolute game changer. It changes everything. And for the folks that have been with me for a while, that's never listened to me, even though I talk about it in my mentorship videos, you had a fast track of it with the 2024 mentorship where I showcased that. And now you see it. But everybody else got to watch it too, so you can't make a mentorship. It sounds smart. So defining a market condition that's very favorable versus not so favorable, that's the number one thing. And then what determines whether you're bullish or bearish? Well, it's easy. What's your weekly chart? Is it looking to run higher up to an imbalance or lower to an imbalance after there's been some shift in market structure where it's just recently ran buy side on the weekly chart and there's a sell side imbalance below where price is? Well, what's it likely to do? Reach down there. So your bias on a higher time frame is bearish. Don't fight that. No matter what you see on a 1 minute chart, don't fight that because eventually it's going to bend the knee to that idea. Now, is that hard? No. But I could make videos where it complicates it and makes it sound very scientific, but it's very simplistic. And reverse it. If the weekly chart has just recently taken sell side and it's been moving up, and we had a down close week I'm not saying we did this, but I'm saying in hypothetical terms, if you're expected to see it go higher, then we had a down close week last week, but nothing's changed in terms of it's reaching up to a higher weekly imbalance or short-term high. Remember, because the market's only going to go to inefficiency or liquidity. If both are in existence, that's the strongest draw on liquidity. That's one of those gems I just tucked in there. See that? Your bias will be bullish in that condition. And then all your short-term intraday trades should be based on that. Filtering out any short selling. Don't do it. No matter how much it looks great or fast it runs for 20 handles, 30 handles, who cares? Let that go. In the beginning, as a new trader, don't take those trades. Only focus on where the market turns bullish intraday with that weekly bias being bullish. So now what did we just do? We just made it very easy. You just beat 80% of the problems and complications in your trading by doing what I just told you there. Did I take a 15-minute video to say something that took me 2.5 minutes? No. I know how to teach, folks. I know how to do it, but I make it hard for people that are lazy because I don't want to teach lazy people. And I don't care if that offends you. I don't care. I want people to appreciate what they get. And having it easy, having it your way mentorship, I'm not all about that. I'm not the Burger King here, okay? So by having a condition that knowing that this is going to be high resistance or low resistance, you're aiming for low resistance liquidity run conditions.